Hi and welcome back, everyone. As usual, my name is Michael LeBlanc, Senior Portfolio Manager with LLC Private Wealth at CG Wealth Management. And this is our monthly update. Obviously, I'm not in the office this week. As you can see, I'm actually on a hillside agriturismo in Medina, Italy this week. I did shoot this video a couple days ago before the end of the month, but I have to retake it because that one was taken on a beautiful sunny day in Verona, and my team wouldn't let me do these trips if it's too nice on them. So quick update this month on kind of what's going on in the portfolios, what we're seeing in the markets, and what's coming up. So obviously the month of September, it did off on a great note. We had a strong performance in the portfolios. A big impact to the portfolios continued to be the utility and bank positions with the ongoing rate cuts, and we've seen the U.S. now start to cut. That trend is starting to improve. Again, we're using those cover call strategies, so we have a really enhanced yield come out of those, which have been paying off very nicely. The Capital Power position continues to do well in the portfolio as well. Is our most recent addition. We did do a bit of a rebalance in September to raise a little bit more cash. Again, like the last two rebalances, we've been peeling a little bit of profits out of the U.S. side. We still continue to see volatility, especially in the tech sector. If you remember to the early September, it looked like it might have been a pretty rough or volatile month as the market started to really shake up around technology. We've exited most our pure technology exposures, or the NASDAQ exposures that we had in the portfolios. We had them right up until August. We started peeling them off. We're completely out. We still have our exposures in some of the bigger names like Microsoft and Apple, and we continue to like those ones, being the super large caps, paying strong dividends, have diversified cash flow, but still have exposure to those higher growth areas. They have bounced back from early September, the technologies, but they haven't really gone to new highs. We've seen them hold their own. But we do still see a little bit of cracks when it comes to the valuations there. They've gotten kind of ahead of themselves when it all around the AI talk, and where that's going to go, and where how much revenue can be created using AI, and that's the big question mark around those names. So basically, we've moved away from those. That's played really well for our September performance. We've moved into the utilities. We've been in the banks. All that's working out really well. As I mentioned, we did peel back some of the exposures more in the U.S. side, not so much the Canadian side, but the U.S. And we're headed into that U.S. election. We just saw the vice presidential debate. Of course, it's still neck and neck in the race. And as always, the markets generally don't like uncertainty going into elections, especially U.S. elections. So we're just being a little more cautious on the U.S. exposures as we head into those months. That cash is going to be there available for us to deploy if we do see volatility. That's not a bad thing. Remember, one of my favorite things in the market is volatility. It gives us that cheap buying power, especially when we have the cash built up a little bit. The election, we're not really concerned about the outcome, or the markets aren't really concerned about the outcome. All the markets want to do is see a decision being made and kind of which path goes forward, which party is going to be leading the government spending over the next 4 years. So that's all we're really looking at from that front. Obviously, a little bit going on in Canada, if you've been following the news. The Liberals, the Federal Liberal Party, facing some non-confidence votes from the Conservatives, and the Bloc Québécois and NDP, of course, jockeying for a little bit more power to keep the coalitions alive, or keep the Liberals in a minority power. We'll see how that plays out. Unfortunately, or fortunately, I suppose, the Canadian market, or the Canadian politics, really doesn't affect markets that much. We really don't have that big international leverage when it comes to our politics, and really one party to the next. It affects us a lot, especially around taxation and some of the Canadian businesses. But again, the Canadian businesses generally not large enough to move the needle on an international scale or market scale. So not a lot of concern around that. We'll continue to watch that play out. I think from what I've read from over here, it's hard to get a lot of Canadian news, but what I get filtered through from the office, we're probably going to see another non-confidence vote coming up, as the Bloc Québécois is putting pressure on the Liberals to give them a bunch of free stuff in order to buy their votes. So we'll see how that plays out. But as far as markets and portfolios go, not a really big impact. We're really not making any sharp moves on that front inside the portfolios. We are looking at a slight rebalance coming up here in October. Again, playing a little bit to the U.S. election, peeling off some profits in some areas where we've done super well, and we want to continue to capitalize on those gains. But for the rest of the year, or certainly until the U.S. election, we expect fairly slow markets. We are coming through that inflationary movement. The economy's slowing down a little bit. The uncertainty of the election, all these things, slowing things down a little bit overall. But as far as the portfolios go, we're very happy. Like I said, those sectors that are we've got the covered call strategies are paying us anywhere between 8 and 16% yields. So even if they stay flat, we're getting great returns on that. The bond portfolio continues to perform inside those who have the lower risk portfolios with higher yields, some north of 9.8, all the way down to about 6, but still really strong for the fixed income portion of the portfolio. So we're looking forward to that. That's pretty much all I have for an update. As always, reach out to us if you have any questions on your portfolio. If it's an external portfolio, we're happy to do a second opinion service. Just kind of give you an overall look at where your risks are, where your exposures are, what you're paying for it, if it's making sense for the returns that you're getting. Reach out to us, give us a call, give us an email. Go to mikeonmoney.com. That takes you to our main website where you can find all our contacts and other videos. But with that, from Italy, I'm going to say bye. I'll be back in the office next week, and I'll be talking to you then. Thanks. Bye.